The MSCI World is the gold standard of all ETFs, but is it worth it to invest right now? And what are the key criteria I need to focus on when selecting the ETF? Let's find out right now. And here it is, here's the iShares Core MSCI World. And let's deep dive into the top 10 selection criteria, what you need to focus on when investing into an ETF. And let's start with the first one, which is the fund size. So by the way, the MSCI World is, and iShares is a product of BlackRock. And when you invest into an ETF, you want to make sure that the fund size is at least 500 million. So you'll be on the safe side and the product is going to be available for you for a long time. And this is doing 40 billion, which is huge. Another criteria is the replication. It's physical, which is good. It's absolutely safe. It's not it's unhedged, obviously, which is absolutely, to me, important because I want to have a certain benefit risk ratio, and this is an unhedged one is fine for me because basically by the end of the day I want to sleep well with the investments I do. Talking about sleeping, volatility can be part of potentially impacting your sleep. As a long-term investor, if it's going up and down 20 up to 25%, I think this is absolutely fine. Don't worry about it too much because basically the next coming years will be looking different, and we're gonna deep dive into the performance in a moment because basically that's what you're interested in. How does this performance look like if I put my hard-earned money into it? And so performance is really important, but also the fee. Before going into the fee, another important factor to me is the listing date. So listing date gives you not only an indicator that it has been around for a while, and it probably also linked to the fund size, but it also gives you an indication that, okay, so if that has been around for a while, there's probably historic data and lots of historic data making me feel more comfortable in investing into this ETF or not. So we're gonna see the performance in a moment. Let's speak about the fees first. 0.2% per annum, the TER, total expense ratio. Is it cheap? Is it expensive? I would say it's on the cheaper side, which is absolutely fine. And again, let's compare this to the active managed funds. So active managed funds, they usually charge you 1.5 or 2%, which means this one is 10 times cheaper, just as an FYI. Another important point, distribution policy, accumulating. I'm not sure about you, but when I invest money and I want to see a really steady growth, and I want to have my money being invested as efficiently as possible. That's why accumulating is important to me. I don't need the monthly or quarterly dividends in order to survive. So what I want to have is BlackRock investing those dividends very efficiently, or reinvesting those dividends very efficiently. And basically, over a long period of time, the gap between investing into dividends and investing into accumulate, you see this gap of performance. So the accumulating part, performance is better. You're better off with this one over a long period of time compared to dividends. That doesn't mean that dividends are bad. It really depends on your very specific needs. If you say, but I do need to live from dividends, I need to have like monthly cash flow or quarterly cash flow, then maybe dividend investing is better for you. And also, I do believe there are MSCI World ETFs handing out dividends as well. So just to let you know. So to me, I'm after the performance. I want to make the most of my money in the long run as possible. Fund domicile, also another important factor to me at least. Ireland in Europe is a tax haven, so that's on the plus side. It's not so important, I would say, from my perspective at least. I think it's kind of a secondary importance. Primary important is the performance. And boy, look at this. So we actually here, YTD this year, we are in October, mid-October 2022. A quarter of your investment is gone. That is absolutely devastating. That's absolutely devastating. While saying this, it might be a good opportunity to invest into those into this situation. If you're a long-term investor, again, I'm not a financial advisor at all. I'm more than happy to share my experience, and so to me, this looks like a good investment situation. But again, I'm more than happy. Let me know in the comment section below if you really want to see the way I invest, and because my investment is actually looking much better than this one, even though I'm investing into global diversified ETFs as well, and I'm also investing into emerging market ETFs. So let's stick with the performance part, because when we look at 2018, that was a rough year as well, you may remember or not, but minus 8.6%, that was tough. That was pretty tough. But the year after, 27%. 2020, we had like almost 16% performance. In 2021, almost 22% performance. And then we are pretty badly hit right now with more than 25%. Again, you shouldn't worry too much if you're a long-term investor. And I'll show you the heat map in a moment as well, on the actual performance and why you shouldn't worry too much. Another important factor for you should be the actual exposure. Talking about diversification and not worrying too much if that stock is 50-60% going down or not. And so if you want to sleep well, I do believe the ETF, in particular like MSCI World, for instance, if you're a long-term investor, can be a good investment. To me, it is, at least. Even though I'm not investing into the MSCI World as such, I do invest into a very similar global ETF. Also, let me know in the comment section below if you want to see which ETFs I'm actually investing in. So exposure and the diversification to long-term investors are important who want to sleep well at night. But again, if we look also here at the top 10 holdings, they almost make a fifth of the entire investment, which is pretty large. And you know all the big names. So here, Apple representing the biggest holdings, followed by Microsoft, Amazon, Tesla, Alphabet, ANC, United Health, Johnson & Johnson, ExxonMobil, and Nvidia. So these are the top 10 holdings. That's a big amount, and basically saying if those 10 or part of them are deep diving, that's going to have a more significant impact into your overall global performance. Another way of diversifying your portfolio is not just the holding as such, but also to the countries. And here you see that the vast majority, 67% almost, are being exposed to the US or coming from the US. So that's pretty being dependent on the US as such. If you want to diversify your portfolio even more broadly, the way I'm doing it, you would also throw in and invest into another emerging market ETF, because basically you see China, for instance, or India, they're not part of this ETF. However, when you look at the global performance, China and India do have an impact, and maybe India, for instance, not as big right now, but as a long-term investor, you want to also look into the next 10, 15, 20, 30 years maybe. That picture might change of India and China in particular. And when you heard Ray Dalio speaking about the performance and the rise of China and the fall of US, maybe something to consider as well to really balance out your your investment into a very broadly diversified ETF. So US, the biggest one, and then followed by Japan, UK, Canada, Switzerland, and some European countries. Another factor to diversify is the actual sector. And no big surprise, having seen the top 10, that technology is playing the largest role here with almost 22%, followed by healthcare, financials, and so on. So good diversification here as well. Whereas I believe technology is also playing quite a large role here. I was talking about it, the performance, and let's look at the performance from 2009 until today, and just go back for a moment and see the big picture. Overall, what you can see is that the trend is your friend. There is a solid growth. So once you've invested 2009 or 2010, you see that your money is would have doubled, tripled, quadrupled over the time, which is good. But you also see that there's some up and downs, right? So like 2015, for instance, 2016, then 2018, 19, and then obviously in March 2020, we've seen the pandemic hitting the market really bad. But then the big increase, and then the up and downs in the last couple of months, or since the beginning of the year. Which opens another question on timing the market. When is the best time to invest into the market? If you're interested in when the best time is to invest into the market, leave a comment below, hit the like, hit the subscribe button, and then I know you want to see what I'm doing and when to invest the best into the market. So I'm more than happy to do a video for you as well on this one. Timing the market. So performance and the return of your investments are so crucial. As I was saying at the beginning, ETFs, and in particular the ETF of the MSCI World, is a long-term game. So you'd be interested in the performance over 3 years, 5 years, 10, 15 years. You shouldn't worry about how did my investment and my portfolio do over the last year, 6, 3, or the last month. Don't worry about it. Just see the big picture and the long run investment. And then going a bit more high level, 2018, you see there was a downside of minus 4%, but then the very next year, totally different year, shifting the gears, 30% plus. This is absolutely massive. And imagine you would have invested 100,000. That would mean a gain of 30,000 US or euro. So that's pretty big. And then the following years, that one maybe not as good, but still 6%, is I think solid. And then the following year, 2021, was outstanding, but then followed by this year. And again, I do believe this is a good, important, or is an opportunity to invest right now in these days. But how and when? Again, let me know in the comment section below. I'm more than happy to discuss this topic as well, because this can make or break your performance as well. Let's have a look into the monthly heat map and see the actual monthly returns. On the y-axis, we see the number of years, starting on the bottom part with 2009 up to 2022. And then from left to right on the x-axis, we see the month January to December. And let me purely focus for now on the year 2022. And we see that we are in October, as you can see, actually with minus 8.1%. This is really bad. This is really bad. But have a look also, like there have been only 2 months, July and March, which are green or were green, which means every other single month, 8 months out of 10 were negative. So you see that something is going on, and usually when the market is going down, people are afraid if they don't see the big picture and they may sell with a loss. This is what you don't want to do. This is really what you don't want to do. And we've seen some periods, even like March 2020, for instance, minus 13.1%. That was the massive drop I was showing you before. This is crazy. And if you have set up a solid investment strategy, you don't worry about this. You really don't worry about this. Trust me. I'm working really hard for my money, and I invest this. And at the beginning, you know, I did worry. You know, I'm very honest and transparent here right now. I did worry, but then the more I deep dived into investing in long-term strategy investing, I said, cool, these might be times of opportunities to invest even more. Okay, so let's see how the future looks like. And right now it's crazy times. It's crazy times, but I think there's a saying, like, in those down times, they create the millionaires. And it would be great if we could be one of those, wouldn't it? Before we go to the end, there's another point I was touching briefly on at the beginning, is volatility. And I was saying anything around 20 up to 25% is fine. So you see, depending on the year, sometimes it was lower than 20%, significantly lower, or about 20%. This one was extreme in 2020 and 2021. That was absolutely outstanding from a negative perspective. But it is an outstanding situation. It's a very unique situation we're in with the supply chain demand and issues, with the crisis, the pandemic, the Ukraine war, the war in Europe, and the extremely high inflation. So many factors are coming together, and I do believe the news will be more negative in the next coming 6 months or so, where companies can no longer afford to exist because of all those impacting situations. So again, might be a time to invest. With this, I'm gonna let you go, and again, let me know in the comment section below, and please subscribe if you believe that helped you, giving you more confidence on investing into an ETF. Oh, actually, I forgot to give you the 10th factor, which is and the 10th criteria, and this criteria is which online broker do you use and which online broker actually offers this ETF. So this is another factor I'm considering all the time. Does this ETF fit into the online broker I'm using or not? And just as a heads up, obviously the MSCI World is so important, as well as the S&P 500. What I'm gonna do is I'm gonna make an analysis what's better, a head-to-head comparison, in my very next video. If you don't want to miss this, please follow me, click on the subscribe button below, and I'm gonna see you in the next video. Cheers.